Hi everyone. So I know a lot of you would have seen the thumbnail and want to know which are the three stocks which can give you a potential gain of 40% or more. So the three stocks are Indian Bank, KPIT Technologies, and Poonawalla FinCorp. Also Affle India. So if you want to know more and get the full technical analysis of these of these four stocks, then please watch the entire video and you will get to learn a lot. Hi everyone, welcome to the Mighty Trades channel. My name is Johar and welcome to another episode of Weekend Technical Analysis. So last week we concluded our episode with Federal Bank. So let's not waste any more time and move over straight to Indian Bank, which is the next chart on our list. Okay, so let's see how this chart looks. So let's quickly switch over to the monthly candle and see how the long-term view looks. All right, so there's a one interesting thing is that there's unusually high volume since 2020. That is a positive thing. And if we go back to the weekly chart, what I can see here is a cup with handle pattern here that can be observed. So this will be the cup, and this looks like the handle. And I believe a breakout did happen. However, since October onwards, as you all know, the market started falling, and this stock fell along with it. But interesting observation is that it has not broken any of its previous lows. So for example, this was one low right here, this was another low, you can say this zone was a low, then it made a new low here, then it made a new low on this side, and now it's sustaining about this price line, which is a very good sign because there is consistent buying happening at every levels, right? You see these large volume bars, so there is a good amount of buying that is happening here. That is interesting. I am aware of the fact that Indian Bank is a PSU bank, but these volumes that I'm seeing here and this price movement of higher highs and higher lows is is something that you can't ignore. This is a very strong pattern of higher highs and higher lows. Also, I'm pretty sure if we look at the daily chart and you put all the moving averages, then yes, the price is trading above the 200-day moving average, and currently it's just touching the 50 and the 100-day moving average right now. So all the moving averages have also pretty much converged at one single point. So there is a very good chance that we might see a quick up move coming from here. So on the daily chart, this is sort of a trend line that it's forming. This is a sort of a resistance trend line that it's facing right now. It constantly tests this trend line and comes down. As we can see here, a clearly established trend line. Let me remove the moving averages again. And it looks like a really strong chart setup. Let's see what the target comes out from this cup with handle pattern right here. Okay. So if we plot this right above the breakout point, so from the current market price, which is exactly at the neckline right now, you can potentially get a gain of 70%, which are really super odds. And this bottom, let me move it down a little bit more. This bottom looks like a pretty strong support. It's come and taken support multiple times over here. So this looks like a really good support line. In fact, this entire zone I would say is a very strong support. Let me just mark it down here, rectangle. So this zone all the way from 129 to 121 looks like a really strong support zone. I think this entire zone should act as a strong support. So if we were to take a position here, let's see how our odds look like from the current market price till the target. So the target, the potential gain is 72%, and the loss that you could assume is, if we take it up exactly here, then the potential loss that you can make is 18%. I think these are brilliant odds. A 72% gain for a 18% loss sounds like a good deal to me. So I am definitely gonna be a buyer in this. I like these kind of trades where the profit potential is extremely high. Let me just add this to my tracker. Indian, what's the full name? Okay, it's just INDIANB. Let me add that here as well. So if you are following this sheet, if you just click on this link, you will get to see the exact chart that I'm looking with all the drawings that I have made. So you can always come back and refer this sheet. So the today's date is 26th. The price as of today is 148.95. There is a cup with handle pattern. There's higher highs and higher lows being made. Unusually high volume. A high volume has been observed. Let us also quickly take a look at the fundamentals of the company. So here we are, Indian Bank. Okay, so right off the bat, book value is superb. It's trading under the book value. As per screener, the intrinsic value is 471. It's undervalued compared to other PSU stocks. So let's quickly look at the quarterly results. Great revenue, very close to its highest ever. Net profit is also great. The trailing 12 months net profit is the highest ever in the last so many years. That's also good. If you look at the shareholding pattern, then this also looks strong. The public holds very little equity in the company. DIIs have increased their holding from June onwards, and that's been stable. FIIs have very negligible holding here since the past couple of quarters. So overall shareholding pattern is also good. The promoters are holding the highest number of shares, public holding is less. So that's good. So I think this is a great chart, and I'll attempt to buy this as soon as I'm able to. So let's put our target right here. That would be 256 rupees. I believe the current market price is as good as any price. Change this. Our stop loss is going to be the bottom of the zone. So that is about 121 rupees. And this trade is currently active. Okay, we are going to keep the buy date as Monday's date as a placeholder. All right. Just quickly change the format here, please. Let me just quickly copy this from the top of the sheet right here. There we go. This should solve the problem. So Monday 28 March, that is our placeholder date. Great. Let's move on to the next stock, which is Gillette. Oh, I'm really surprised why such companies with such heavy branding, why have their shares not performed at all? I mean, just look at this fall. This is crazy. However, this is I think a good time for long-term investors to probably get in at this price. I mean, Gillette's price is currently trading at a price of where it was trading in 2015. So the valuations of the company have really come down. Let us look at the fundamentals ones to see if this is a good time to buy, because just look at the fundamentals of the company, right? The ROC is 51%. That is brilliant. It's not easy to maintain such kind of ROC in a country like India. Let's look at the sales. The sales in the last quarter were highest ever. Not highest, second highest ever. The profit was also close to 100 crores. That's also good. The trailing 12 month sales is highest ever. The margins have gone down a little bit because of the inflationary pressures. As you can clearly see here, their margins were between 22 to 23, 25, 26%, and now those have come down to 20 to 20%. So I guess they will take some time to bring their margins back up again. If you look at the shareholding pattern, the FII holding has been stable since the last 6 quarters now. The DII holding has been also stable since the last 4 quarters. The public holding has also been stable, and there was a massive shift that has happened here. I think some DII has probably been changed. Yeah, so Life Insurance Corporation of India's holding got moved up over here in this spot, which is why it looks like the public shareholding has come down. But overall, the public shareholding is also at just 12%. So I think this is a good time for long-term investors to get in, because if we look at the fundamentals of the company back in 2015. So let's see in March 2015 how the company was. Profit and loss here. So okay, they seem to be reporting June to June. Don't understand why, but okay, let's see June 2015. In June 2015, the company's net profit was 158 crores. Right now, that net profit has doubled close to 300 crores right now after 8 years. But the share price hasn't. It's, it's trading at a valuation 8 years back. So I think this is a good time for long-term investors to get in. And I think if you hold this for a period of 2 to 3 years, you could easily uh, get a 65% return over the next 2 years, which is a good 30-35%. So for long-term investors, this is a good stock to add in your portfolio. However, because these are very slow-moving stocks, when they move down one side for a very long time, and when they move up also, they move up in one direction for a very long time. So the only way to make money in these stocks is try to buy it at as low a price as possible, and then just hold it for the next high that it makes, and then book your profits over there. So that's the view on Gillette India. Let's move on to Phoenix Mills. Okay, Phoenix Mills, let me look at the monthly chart. So in Phoenix Mills, what I'm seeing is, if we observe on a monthly scale here, this looks like a resistance line that it's been trying to get on top of. This line has been a resistance since 2007, right? As you can clearly see here. It was on a stellar up move before the COVID, but then as you can see here, this is the month of March 2020, and the stock just crashed by like 33-50% over here. Now the stock is coming back up, and I think it is ready to sort of give a nice breakout above this line. Let's switch over to the weekly chart and see what kind of pattern can we see. And we can clearly observe something very similar to a cup with handle pattern again over here as well. Let me draw this for you guys. Okay, there we are. So if we connect it from here to here in this fashion, we can say that this is the cup, this is the handle that formed, and this is the neckline that we can observe. Now the target as per this is coming to 1280 after the breakout from the neckline. So from the current market price, this is coming to a gain of just 24%. So not really exciting at this point. It would have been a good buy to buy it over here on this breakout candle or on this retest that happened back in the month of October. But definitely a very good chart structure, again making higher highs and higher lows. It has a nice bullish pattern also supporting it. It has a very long consolidation also that is going on. So if we go over to the daily chart, let's put on the moving averages as well, then yeah, the price has taken support over here at the 200-day moving average back in April 21, moved up, then again came close to its support area here near the 200-day moving average, went up, and now again it tested the 200-day moving average and it's gone back up again. And as you can see, all the moving average lines have also converged very closely, so there is a very good chance that we can see a good upside in Phoenix Mills from here for a short-term gain of 24-25%. It can go even further, but right now this is as per the chart pattern that we have, this is the max that we can calculate. But since the target is pretty small right now, I am not personally interested in it. But for any short-term trade, I think this is a good buy opportunity. Moving on to APTUS Value Finance. Let's move over to the weekly chart. Okay, looks like it's a recent listing. Stock's been consolidating since August 2021. So it got listed in August last year. And the price has been just violently moving in a particular range. Let's try and mark that range. Yeah. So this is the range that it's been largely trading it. If we look, I think the better way to mark the range is to look at the line chart. Yeah. So as per the line chart, this is the range that it's been largely trading in. So unless we see a breakout from this range or a breakdown from this range, there's not really much of a trade to be taken here. However, you can wait for it to come and test this support line, and then you can hold it up till the resistance line where it's trading, and you can make a 25 to 30% gain on the same. As of now, there is no trading opportunity that I see as such. Moving on to GRINFRA. Okay, this also looks like a new listing, got listed in July 2021. Right now in a downtrend, making lower highs and lower lows. Unless we see a good strong reversal, I don't see any reason why we should hold on to the stock. The candle that was made in the week of 7th March looks really strong, moved up by 10%. Nice big bullish engulfing candle here, but still it looks like I don't think it's reversed yet. Right now we're looking at the daily chart and I don't believe it's still signaling a very strong reversal. So I think it's better to avoid this right now. Going over to KPIT Technologies. Just look at this. I mean, this is such a brilliant stock. If someone would have bought it right here when it broke out from its previous all-time high, they would be sitting on such beautiful profits. I didn't get a chance to enter in the stock. I never even knew the stock. I only started my stock market journey somewhere around here in the month of June, July 2020. So I had no idea about this company, but just look at the returns it's already given. and it looks like the company is not yet done. I mean, it's given a 500% return over the last 2 years. A brilliant move. If anyone who's holding it, congrats. You should thank your stars that you got to enter into the stock. Let's look at the daily chart and see what's happening here. I believe it has made a significant base in this price zone. This really looks like a very strong base. Could potentially be a saucer type of pattern that it's making here. Not really sure what the target would be, but looking at the way the structure has formed, with this fall and creating a base over here and then moving back up again, you could potentially see it going and touching its all-time high once. So that's a potential gain of 35%. Let's try and see what kind of stop loss can we ideally expect. So if we are going to go to its all-time high from the current price, then that's a gain of 35%, and the potential stop loss for us would be the bottom of this green candle. So right now it's not a very good risk to reward ratio in my opinion. If it would have been a 50% gain for 30% risk, that would have been much better, but right now it doesn't look that appealing to me. But I would definitely be interested in buying it somewhere around this zone. If the price were to come here between 530 and 540, this would be a really nice price to buy. But it definitely looks like it's making a base, and it's very possible it can go here. So I'm going to add this to my tracker just to track the performance of this trade, but I most likely might not enter this stock myself. So please keep that in mind, that everything that I'm sharing here is for knowledge purposes. We are just doing this entire exercise to figure out if our strategy works or no, and where should we make changes, and should we even be in the market if our strategies are not working. So this is just a complete educational exercise, so please do not go and make any investment decisions based on anything that we discuss here. All right, so let's look here. From what I am aware, KPIT technology is something to do with electric vehicles, because in electric vehicles there's a lot of autonomous technology that is being applied, right? So it's sort of like a competitor to Tata ELXI. So let's see what the company's prospects look for the future. I mean, why is the company's share price zooming to such a level? If we look at the results, then highest ever sales, operating profit margin is also at highest ever, net profit is also highest ever. So good results. If you look at the profit and loss, highest ever sales again, highest ever net profit again. Really great performance there. If you look at the shareholding pattern, FII holding is consistent since the last 5 quarters. DII holding has also pretty much been consistent, plus or minus 1-2%. The public holding has increased. Let's see if there are any big names in public holding. Then yes, we have ICICI here, but they seem to have reduced their holding. Tata AI Life Insurance has gone off, and these two individuals, one is Mr. Ashish Kacholia, has also gotten out in the month of September 2020. Let's see who these others are. Others is some, looks like some HNI or maybe a part of the promoter group. I don't know, but they hold 1.65%. So public holding is a little on the higher side, but nothing to be really concerned about. Promoters are holding currently the highest stake, and a lot of the stock is in strong hands. Close to 75% of the holding is with FIIs, DIs, and the promoters. So let's note down this trade right here. Okay. So strong fundamentals, number one. Technically, this stock is extremely strong and bullish. Creating a base after correction. looks like it's ready to move up. Okay, here's what I'm gonna do. I'm gonna reduce the target entry price here. If I do get a chance to buy this at this price, 560 to between 520, this makes it a much more decent risk to reward for me at least. So I'm going to keep the target entry price as 560 rupees. I would really be interested in getting in on the stock if it came here, and the target will be the all-time high, which is 799 rupees. The potential gain will be 42%. The stop loss is, sorry, what is the stop loss? The stop loss is the bottom of this green candle, so that's 512 rupees. So the potential loss is 8.57%. We are currently waiting for entry, and this is the current market price. Let me just copy paste this formatting right here, please. There we go. Okay, now there are two entry exit methods that I'm going to use here. Okay, so one entry point is if it comes low, I'm going to buy it. And another entry point is, let me just put on the moving averages here on the daily chart. Currently the price is trading below the 50-day moving average, above the 100-day and above the 200-day moving average. It looks like the 50-day moving average might cross the 100-day moving average on the downside, and if the price moves up, then this might cross it on the upside, which will be a good sign. However, for me to get my bullish confirmation, I will wait for the price to break this price, which is 638. So if it breaks 638, then that is also another entry point that we can mark. And if that were to happen, then our profit will be, in this case, 25% if you waited till here. And our stop loss will be very simply going to be here, which is if it breaks this line or this zone, this price right here, then we will exit. So that is a profit of 25% and a loss of 7.6%. So the odds are a little bit less over here. The risk to reward, the risk is a little higher compared to the reward here, but it could potentially be a very fast quick move. I mean, all it takes is just 2-3 candles and you could be at your target, and you could be in profit already. So I'm gonna have this entry added 2 times, and this time the target entry price for this entry is going to be what is this, 640 rupees. And the stop loss in this case is going to be 590. Sorry about that. So this is going to be 2 entry points that we can keep in mind for the stock. So whichever entry point comes first, we can then take a position, build a position accordingly. Great. Moving on to the next one, which is POONAWALLA Corp. Okay. Just a disclaimer, I already have a position in this, and let me switch over. Let me first remove these moving averages. Let me go over to the weekly chart. So that I already have a position in this stock. I believe that the stock is gonna give a pretty nice move, and how I come to that conclusion is that it's breaking out of this resistance zone of 2017-2018, right? This was a pretty significant resistance zone which it has finally broken out of, and the ideal target for this stock is, we take the range of this fall and just put it up there. So the potential target that we are looking at is 371 rupees. So from the current market price, that is a 46% gain that you can potentially make from here. And because the stock has corrected quite a bit and built a base already, so the stop loss is also pretty clear. If the stock were to move beyond say from the current market price, let's go up to the target. So this is the target right here, and from the current market price, the loss, the stop losses here. So if it breaks this low, you exit. That's a 14% loss for a 47 for a close to 48% gain. Good risk to reward ratio, good odds. I like the chart of POONAWALLA Corp. I'm already invested in it, so please keep that in mind. And as usual, take your investment decisions after consulting your financial advisor. Just making that disclaimer out there already. So strong breakout from high of 2017, 2018. And also, I'm not aware, maybe you guys might not be aware of this, but Poonawalla, which is the Poonawalla family, which owns Serum Institute of India, they have actually taken over a company called Magma Corp, and they have renamed this to Poonawalla Corp. So before, this was known as Magma Corp. And since that management change has happened, there is a fundamental new story that is building up in the company, which could potentially make this a multi-bagger in the future, because the Poonawalla family is backing this right now. Okay. Target entry price will be the existing price. The target is, let's see here, 373 rupees. The stop loss is 217. So the potential profit is 47%, the potential loss is 14%. This trade is currently active, and this is the current market price. I'm going to put 28 March as the placeholder as usual. And that's that. Okay, I think I did not add the chart for this. Let me just quickly fix that for you guys. Control C. KPITTECH. There you go. That's the chart link right there. And over here, Puna. Voila. There we go. All right, great. Moving on to GSPL. Let's see. Let's move over to the weekly chart. Charts in downtrend. This looks like it could take a support here and move up, but as of now, no real reason to enter into the stock. Yeah, I don't see any reason to be bullish on this. So let's move on to RADICO. RADICO Khaitan also looks to be in a downtrend. It looks like it might have formed a base over here. Let me just quickly look at the daily chart. So this was the base, it moved up. Still doesn't look too bullish right now. I would only get bullish on this stock if it moved up beyond this price of close to 1,000 rupees, if it started trading above that. Otherwise, right now I don't see any momentum in the stock currently. Moving on to Natco Pharma. Natco Pharma has been consolidating since the last 5 to 6 years in the same price range as we can see here, back from 2017 to 2022. No real reason to enter into the stock right now. Absolutely avoid this. Going to Chambal Fertilizer. Now this looks really interesting. Okay, if we draw this from its COVID 2020 lows, it's just been on an absolute bull run, right? Crazy. Let's move over to the daily chart. Let's put over the moving averages here. And as we can clearly see, it's been consistently trading above the 200-day moving average. It's also been trading above the 100-day moving average since a very long time. And it's very closely, you can say, hugging its 50-day moving average, constantly taking support between the 50-day and the 100-day moving average and moving up. So definitely a good long-term chart structure is very bullish, but in my opinion, it's already moved up a lot. It can further move up, but I don't know if it's worth taking the risk right now. Let's quickly take a look at the fundamentals of the company to understand why this could be happening. Um, so it's still not overvalued, mind you. The industry P is saying 11.1 and this at 11.13. So clearly, the fundamentals of the company are catching up to the price. So it's not overvalued, definitely. If we look at the quarterly results, those are highest ever. The profit has come down a little bit, but again, very good net profit figures for the last 5 quarters at least. I mean, so the last 6 quarters it's been generating a net profit consistently of 400 crores and above. That is a very good thing. If we look at the profit and loss statement, then the last 12 months have been the highest ever in sales and the highest ever in net profit as well. So very good that our Indian companies are posting their highest ever numbers during a time when the COVID pandemic had really struck us, right? So really good fundamentals. If we look at the shareholding pattern, then interestingly, since March 2021, FIIs have been continuously increasing their stake, right? From 7.5 to 8.42, 11.40, and now the last is 12.12. DIIs have reduced their position. The public holding has gone down, which is really good. And we can also see a slight increase in the promoter holding, which is again always a good sign that the promoters are buying. In FIIs, we can see that MIT is a big holder, and in DII, we have multiple ones. The three that are currently we can see on the books are DSP, UTI Small Cap Mutual Fund, and Nippon Life India Trustee. So definitely a very strong shareholding pattern, very strong fundamentals. Chart is also technically doing really well, but I am not sure how can we calculate our targets right now at this point. If someone were to probably put a Fibonacci retracement here, they could potentially get targets, the next couple of targets. Like for example, if you look here, then from the current market price. Now, mind you, I'm not an expert at how to use Fibonacci, to be very honest. So please don't take whatever targets I mention over here. Please don't hold me to it. But if this is what I'm doing is right, then you could potentially from the current market price get a gain to the next Fibonacci resistance 38%. And if you look at the Fibonacci numbers here, we can clearly see that each of these Fibonacci levels have acted as a resistance, right? It came here, took a resistance, came down, came here again, took a resistance and came down. Now the next resistance is at this price 458, and then there's the all-time high at 485, and if it manages to break that, then it will go directly to 570 and then it can potentially go over to 700 rupees and above. So let's see if this goes or no. Right now, I can't see any chart pattern as such which gives me an indication of a target. But maybe any experts sitting out there who can apply Fibonacci, maybe they can come up with good targets. Because definitely the chart is in an uptrend. If you know what you are doing, then you should jump on the wagon. It's currently coming down a little bit. So if you are able to buy it here, between 400 and 350. That will be a good entry point, and then you can keep holding it. So that's the view on Chambal Fertilizer. Moving on to WABCO India. WABCO India, I had a position in this company a couple of months back. I think I bought it when it was around here, I believe, around 7,500 or something like that. And I exited over here at 8,000 or something. Just when the market started behaving weirdly in the month of October or November last year. That's when I exited the stock. Uh, so it's been in a very long consolidation for a very long time, right? Just look here. It consolidated from 2015 till 2017 in this price box, then broke out and again came back down. For this, let's look at the monthly chart for a better view. So here is the monthly chart that we are looking at, and this has been a very long consolidation range for the stock. Okay, um, and in fact, the let me tell you my observation that I had made when I entered into the stock last year. Last year, what I had observed is that this was a resistance line. Let me remove this box. What I had observed last year is that this is a resistance zone for the stock. It had broken out of the resistance, went up, consolidated for 2-3 months, and then came back down. Okay, and what I had seen uh, while I was entering in the stock somewhere around here is that the last time it broke out, it had a very quick up move. For 3 months continuously, it was on a stellar bull run, broke out, the breakout fizzled out here, came down again. Then again it tried to do that on this candle in September 2020. That the price basically consolidated in this range, right? If you see here, before this breakout, there was no consolidation in this range of 6,000 to 6,500, where I'm hovering my mouse right now. It just went up directly. Then it consolidated here for a very long time, built a much higher base, and then obviously the market sort of and obviously this sell-off came here somewhere in the month of September. In the month of September and October, the stock price crashed for XYZ reason. I'm not sure why. Because this is the candle of March 2020. As you can see here, it corrected quite a bit, but then very quickly went back up again. I don't know why it fell down again in September and 20, but it fell down. Then it again came back up. And this time, when I noticed this, it was getting ready to break out, but it was getting ready very slowly, right? If you compare this move here and you compare these moves here, these moves are very slow and steady, right? Every month is just gaining by like 2%, 1%. Over here it's gained by just 1%, and here by 5%. While if you compare these, this is a move of 9% right here. This is 6% move. There's a 14% move. So here it was consolidating at every level, and it was moving up slowly and steadily. Then it tested the resistance line, corrected by 4%, made a higher low, again went back up by 4%, and then finally you can see the breakout. And the breakout happened, but then this previous resistance of 2017, the stock was not able to break and sustain, and it's currently come back to this support level. Now this looks like a really strong support level now, because it has consolidated again over here for a pretty long time. Let's switch over to the weekly chart. It's consolidated on top. Hopefully it should not break it this time. If it does break it, then whoever is holding it should exit the stock, because it can potentially then go in a downtrend and then just consolidate here for a couple of years for God knows how long. So right now you should only enter the stock if it breaks above this 8,500. Otherwise you could be stuck for years in a particular range in the stock. So that's the view on WABCO India. So it's very important that you know the character of the stock that you are entering sometimes. Even if the stock is really bullish, just go study the past, how the price has behaved. And as you can see clearly with this behavior, the stock consolidates for a very long time, then makes a quick up move, then goes back down, consolidates. So you don't want to you don't want your money to be stuck for a period of 2-3 years just in consolidation to get out again. So know the character of the stock. I knew the character of the stock, which is why when the market started behaving weirdly back in October, November last year, I said I don't want to risk it, and I exited out of this. Now moving on to Alembic Pharmaceuticals. In a downtrend, don't see any reason why we should enter it right now. Looks like it's at a strong support of 2015. This was a previous resistance here. There was a breakout that happened in what is this, April 2020, and since then it's just been consolidating here for most of 1 year, and then the price just tanked by like 17% in July 2021, and then it's been in a consolidation or a down phase over here right now. So no reason to be entered into the stock. If you look at SFL, which is Sheela Foam, this looks in a very strong uptrend. Looking at the daily chart right now, let's plot the moving averages. So the price is above the 100-day moving average, currently just kissing the 50-day moving average. This large red volume bar looks a little concerning. I don't know who exited or who bought such a huge quantity here, but right now it looks concerning. One thing that I can observe is that there seems to be some sort of a triangular sort of formation building up here. Yep. Let's switch over to the weekly chart. Better clarity. There we go. So it looks like it's forming something like a pennant pattern or something. So it could be a couple of months where it consolidates still in this price point, and then you might see either a breakout or a breakdown. Right now, it's better to avoid it right now. Let it break out or break down from this triangle or pennant, whatever is forming, and then we can make our view. Let's also quickly take a look at some trading ideas to see if anyone else has identified this or made some other assumptions here. This is an idea that was published on March 7th. High probability trade for long, 5-10% target. No, 5-10%, I do not work for that, so I'm not interested. Okay, then the other ideas are just way too old, back from September or August, which aren't really relevant right now. So let's wait for it to break out or break down, and then we'll see what view to take. KIOCL again has been, just looking at the chart right now, face value. It does look very interesting because this is a real massive, you can say, what is this called, rounding bottom formation that I'm seeing here. Right, a real massive rounding bottom that can be observed. So as you can see clearly, there was a nice rounding formation. It built a base and now it's going up. Now it seems to be taking support of the breakout of the rounding bottom formation. If it does take support here and starts moving up, you could easily see it go above, back to its all-time high of 495. If I'm not wrong, KIOCL has something to do with mining, and the Ministry of Steel and Goa. It's an export-oriented unit with iron ore mining. Okay, so definitely this could be a strong bullish move coming into this, because as you know, steel prices, commodity prices, iron ore prices, everything is going up. There seems to be a significant volume build up here as well, which is really interesting. So if this stock is to break out from this consolidation right here, then we could potentially see a big move happening in this particular stock. Right now, let it break out from, I would say it's best to, in this kind of environment, let it break out above 300, then we can enter into the stock. Otherwise, right now, you should avoid it. Moving on to CDSL. CDSL, It has moved up quite a bit now. I don't know how much further it can move up. The risk to reward is too risky, and the markets are very volatile. If you just look at the daily chart, just look at the moves. I mean, it just moves up so violently up and then violently moves down also. It's way too volatile in the market right now to make these kind of bets. So I'm going to avoid Cdsl right now. Moving on to Yuko Bank, completely trading at the bottom right now. It looks like it could be building a base at this bottom. So let it break out of this price point of 16 rupees, and then we can potentially take a trade in this. If we look at Aditya Birla Sun Life AMC, okay, looks like this got listed back in October 2021, and after listing it has nearly lost, let's say, 30% of its value already. Let's quickly take a look at the fundamentals. I haven't seen the fundamentals of Aditya Birla Sun Life. ABS, there we go. Okay, so ROC is good. Valuations are coming down to industry valuations, I see. Let's look at the quarterly results here. Quarterly results, highest ever. Net profit, highest ever. Yearly numbers don't look that great. Net profit does look pretty good though. The revenue hasn't gone up, but the margins have definitely improved. That's a good sign. If you look at the shareholding pattern, then promoters are holding 86.5% of the shares. Okay. So I'm guessing what's going to happen is that these guys need to bring down the shareholding by another 11% to meet SEBI's rule of 75% maximum holding. So I think there is going to be a continuous selling for at least the next 2-3 quarters in this stock, because the promoters need to reduce their holding to 75%. So because of that, there could be a certain amount of pressure that will stay on the stock. So I would say it's best to avoid until these promoters have completed reducing their holding to 75%. Okay, going over to Birla Soft. Birla Soft is looking strong. All IT companies are looking strong right now. It has corrected quite a bit. You could potentially see it going and touching its all-time high again, which could give you a gain of 26%. As of now, for any short-term trade, it's good, but I don't see any large, mighty trade that we usually go for. So nothing further to discuss here. Let's look at Apple. Okay, Apple has an interesting chart pattern here. A chart pattern that we all like and love, which is the cup with handle pattern. So this looks like the cup right there, and this looks like the handle. And it looks like it broke out in the month of Jan 2022, but then obviously the Ukraine-Russia war happened and everything just fell down. Good thing though is that it did not break this low. In fact, it made a slightly higher low, which shows that there is inherent strength in the stock. So that is a very good thing. And also it's gone through a long period of consolidation, right? I mean, if you see here, the price has not really given any return in the last 1 year. This high was made in March 2021. Right now we are sitting at March 2022. So the price hasn't really given any returns over the last 1 year to its shareholders. So you could potentially see it now moving up further. And if we calculate our target as per this pattern, then the target comes out to a gain of, let's see, let me calculate the long and short position. Here we are. So from the current price, the gain is coming to close to 40%, 39%. Our stop loss, we'll keep it at the lowest low here. So 16% would be our potential loss in this trade. Great odds. I also believe this is a great company. Let's go and look at the fundamentals right here. A little overvalued, but ROCE is really good, 40%. Let us look at the results. So December quarter, highest ever revenue, highest ever net profit, great. If we look at the profit and loss statement, then the trailing 12 months, again, highest ever revenue and highest ever net profit. Great. Let's look at the shareholding pattern. FIIs are reducing their holdings since the month of June. Not a great sign. DIIs are stable. Public holding has gone up by about 2%. Let's see if there are any big names here. There is one name, Malabar India Fund, but it looks like they have also reduced their position by 0.5% here. So shareholding pattern does not look promising. This FII selling could be, I don't know, they could potentially, the selling that they are doing, that this could be one of the companies that they are selling. So overall, the shareholding pattern is a little disappointing, but fundamentally the company is really, really strong. So I'm gonna add this to my tracker. I think this is a good price to buy this at. If it does come near this zone of 1150, etc., that would be a good zone to add more quantity here. But overall, the structure is very good. It's nicely maintaining a nice support trend line as well. If we switch over to the daily chart, I am also sure that the moving averages will be supporting this price. And yeah, as you can see, the price is taking support over here at the 200-day moving average, which is this red line. It again took support here at the 200-day moving average. It's trading above the 100-day moving average, and it's just very close to the 50-day moving average right now. So if this 50-day moving average crosses the 100-day moving average on the downside, we could see some downturn here. But overall, right now, the chart structure is looking nice to me. So it really depends on the FII selling, how much they sell. But overall, a nice chart structure. I'm going to add this to my tracker, and let's see how this strategy works. So Apple is the prior is the chart. Oh, sorry about that. Let's see this. Apple. Okay. Let's see. Alright, the price, the date today is 26 March 2022. The price as of today is 1208.75. Cup with handle pattern. Put fundamentals. Price in good trend. Okay, so the target entry price, we are going to keep it the same where it is right now. Actually, you know what, let me just check one more thing. If you look at the daily chart right now, just to ensure so that our money doesn't get stuck. No, this target, current price looks like a good entry price to me. Okay, the target is let's see here, 1689. So we're just going to keep it 1670. The potential loss is going to be 1008. So potential loss 16%. This is currently active. Let's see. Just going to do a quick time check to see how far along we are. Okay, we are almost out of time. So it's 59 minutes exactly since we have been recording. So I think we have found a good number of trading opportunities today. We have found 3 charts. Indian Bank, KPI Technology, Poonawalla FinCorp, Apple, all with good solid targets, with Indian Bank having 72%, this having 42%, If you were to buy it at the lower end, and if you buy it at the higher end, your target is 24%. POONAWALLA Corp potential of 47%, and AFL has a potential of 38%. I hope you enjoyed watching the video. I hope you understand how you can really look at charts on your own, do basic fundamental analysis, and create your own trading ideas and trading strategy. You don't need to be dependent on anyone to create or give you trades. No need to join any Telegram group, etc. Just do these simple things and you will be able to trade on your own. This 1 hour series that I shoot every day is literally what I do every weekend. Obviously, I'm going to sit for a couple of more hours right now. I can't shoot a 3 hour or a 4 hour video because I don't believe anyone would sit and watch the whole thing. So here, by doing this on every Saturday for 1 hour, I'm just giving you an idea of how I look at things. And now once I turn off the camera, I'm still going to continue looking at charts and finding new trading opportunities for myself. So thank you for watching the video, and goodbye.